What's up, guys? It's been a while since I've updated our YouTube channel with any content, but I just got finished with our daily webinar with the LiveStream Trading group. And as much as I'd love to just go ahead and share that one out to you guys, I thought I would just do a separate video, just maybe a little bit less detailed in terms of exactly what signals we're going after in this market. Is kind of proprietary to our strategy, but I think that I can help you get some insight on how to better and more properly trade this market environment. And because the reason I'm bringing this up is really just because for a lot of you guys, especially if you've only been trading for maybe like 3 years, you've actually probably never traded in a bear market environment before. And it's quite a bit different than trading in a bull market environment. It requires quite a bit more savvy decisions when it comes to where to enter, where to exit, when to buy, when to sell. And these are sort of things that we go over, on a daily basis with the team, and kind of, I feel like there's some help that I can give you guys and some value that I can provide. So let me know if you guys find this helpful. If you do, more than happy to keep updating the channel with ideas here and there as they come. But overall, I just want to give you guys some ideas of, first of all, what I think is going on in the macro view of the market, some of the key areas that we've been discussing with our team that we've expected, either bounces or reversals to happen, and why. And then I'll give you some ideas on what you need to be doing in terms of, or what you should be considering doing in terms of where you're looking to buy and sell. Not necessarily in large caps or futures. We trade a little bit of everything, but even in the small cap space, like today, for example, there were actually a few daily chart breakout setups that in a bull market environment would have likely given out a lot more return to the risk. But in this market, you'll see, I'll show you some examples of kind of like where you need to be looking at buying, so that actually instead of buying into a breakout, you're kind of selling into the breakout. I'll give you some examples of recent daily chart sort of long setups that I've played and how I've managed them to, not hold too long, because we're just not in a market where things are following through on the long side, obviously. So from the macro view, let's just talk a little bit about where the market's coming from, where potentially it could be going, and some areas that we've had that have been of huge interest lately. So the first time, and you can scroll back to early January, I started to notice some macro signs of, from a technical perspective, of us getting into full-on bear market territory. And the first big sign for me was a break of 456, which was different than this break over here and this break over here. This was sort of it's actually a really large bear flag after a failed high-a-day push. And the biggest factor to me, of why we could have such a huge correction from that 456 area in sort of a setup like this, was because of where we're at in the yearly chart. There's no question that if you look back historically, you can go back as far as, I was born in '85. This is just after my birth date, really, a few years later. This is the entire history of the S&P 500, okay? And you'll notice that just like any other chart, the way that these stocks need to move is they need to kind of breathe in and breathe out. And any time that we have a large move up in any asset, stock, security, or cryptocurrency, Bitcoin, anything, there's eventually going to be a wave of selling and a correction that's going to happen. And the trick to, whether it's investing or day trading, is you want to be in a trade to actually be selling into levels like this and selling into levels like this. And I can guarantee you that there's no experienced, savvy investor, hedge fund, or anyone that really is experienced who would have been a buyer, who likely would have been a macro buyer in the S&P 500 over like 455 to 460. And if they were ready to unload this thing at the first sign of a reversal, which I think was the first major sign of a reversal, was right here. But if you look at the yearly chart, I don't think there really has not really been a spot where we've ever been more extended to the upside than we've been over the last 2 to 3 years. We've been in a very special market environment, which, if you go back, a year or two ago, when we were going through some really big bursts of momentum and some just really insane market action, the thing that I kept sort of saying to well, telling myself and telling our group and anyone that was, trading with me or talking with me, is that it's just simply not a sustainable market environment. You just cannot expect things to last like that forever. And I think that it was a very special market environment where a lot of people had, an opportunity to potentially make a lot of money. And I think particularly actually the newer traders probably did the best in that market environment, because it was a market where you didn't. I mean, it was so bullish and there was so much momentum every day that you really didn't have to focus as much on risk management as more experienced traders likely do. And there was a lot. They were able to get away with a lot more poor risk reward scenarios, chasing momentum and getting away with it. Problem is eventually that market environment and cycle changes, which is what we saw just after January of this year, and it really changed the way things move. As a matter of fact, for me, once we've kind of started to get into bear market territory, I was starting to find more trades. I was starting to see better risk reward opportunities, both long and short, and the market environment felt more normal to me. Um, but keep in mind, guys, when you look at, so just zoom out a yearly chart on SPY. I started trading in, it was actually 2 years before the 2008 collapse, 2006. So I started trading in a pretty decent, in terms of like, you know, market environment and setup. It was during a breakout on the yearly chart. So I started my trading career right in here, and then it was an interesting time to start because as far as a macro perspective goes, it was a bullish setup overall in the market, but it also led to the biggest bear market at the time that I had ever experienced, the 2008 collapse, which came shortly after a failed breakout into all-time highs, which is another thing that I was paying attention to. Was if you go back to the 2008 collapse, and if you look at it more on a macro perspective, like the weekly chart, you'll see something similar, like a failed weekly chart breakout on a very extended yearly chart that ended up, moving things way, way down into bear market territory. It's not exactly the same, but kind of similar right in here. Broke out, tried to break out into a weekly chart, a little extended on the yearly at that point, pretty extended on the yearly. Not the type of setup that I would buy on a 5-minute time frame or a 15-minute chart or even an hourly chart. This is just not a good setup for longs there. So, that to me, that was sort of a similar sort of failed weekly chart breakout with a lot of room below for a bigger correction. And if you look at where we've been coming from, so since that 2008 collapse, which, it's funny though, for me, I was prop trading 2006, 7, 8 through, I think about through 2012, before I started trading on my own. And that 2008 was actually a breakthrough year for me in my day trading. I actually had my best year from the first 2 years, and most people don't do very well in the first 2 years. Anyways, they're just learning how the market works. They're, especially back then, you guys have a whole lot more access to information than I did. I didn't even have Twitter, I think, until like 2000. I don't even remember. It was like maybe 6 or 7 years ago. I didn't even. It's not as popular in Canada, and no one I knew had Twitter, so I didn't even look at Twitter for a long time. Um, Maybe until like 7 or 8 years ago. But yeah, there just wasn't as many avenues for learning, and there was obviously a lot more trial and error. But during that period of time in 2008 where we had this massive collapse, is where I really got into short selling, and honestly, it was a special market environment where it was way too easy to short everything. Just the same way as a lot of people who entered the market environment in, that 2020, 2021, it was way too easy to long everything. And it's good and bad. It's good in the short term, because in the short term, it's pretty easy. For example, for me, it was a lot of shorting in 2008, and I'm being able to get away with maybe less than ideal risk reward scenarios. Maybe at the time I wasn't even aware, how that some of the scenarios I was taking probably weren't good setups. I was obviously only a 2-year trader, so I didn't have a lot of experience then. But when that stopped working, it became more difficult for me to become a long bias trader because I saw so much success on the short side during that period. So there was some growing pains after having my best year to date. There was a lot of growing pains for years going forward where I just had a little bit more of a harder time getting on board with long side trades, and then we went straight into a full on bull market, as you can see here, yearly chart wise, pretty much ever since. We had one giant correction during the peak COVID, and I'll just go on a daily chart, and you can see that that was a very short-lived but massive correction over the course of a few weeks, or maybe not even a few weeks, like maybe, yeah, between like a few weeks to a month before it recovered, 2 months. Um, so yeah, I mean, the opposite effect might be happening to a lot of people who, if you entered the market, for example, just let's say 2 years ago, you were so used to going long and getting rewarded for pretty much any scenario. It seemed like it was very hard to do wrong for longs during that time. And now you may be finding that you're struggling a lot, particularly with the long side for sure, but even the short side because we're not getting as many extensions. So, like I said, I mean, I find that as someone that has traded through everything from a 2008 financial crisis to full-on bear markets to the COVID extreme of a bull market. Um, I find that I like to live in that normal market environment where there's not too much momentum where you're having trouble finding like good risk reward scenarios because everyone's chasing things too much. Um, that's kind of where I like to live, where there's a lot of quality setups. There's some good follow through, but most of the time the risk reward is fairly tight. Setups are pretty frequent, and what I feel like probably a lot of you guys are going through is like I said, when I was going through the 2008 collapse, got a lot of success on the short side. It was kind of harder for me to get going long. Obviously, since then I've developed a system that I confidently can go long or short at any given time, but my bias really depends on the bigger picture, the macro view of what's happening with things. For example, like um, if we're in a downtrend in SPY, which we were for like weeks to come, I'm definitely going to be more short bias and looking for short setups on days where we reject that trend and are looking to head lower. So days like this, and especially like after like that sort of a failed breakout higher, I'm going to be definitely looking at shorts on days like this. I start getting more cautious and careful when we're getting into now super downsided extension, because this is typically, and this is the last. I mean, if you're a member of our group, just go back to this week of webinars. For 3 days prior, I was discussing how this was going to be likely I want to say a macro correction, but not really, like just a multi-day correction back to the upside was coming there. Likely on the actually, you can go to my Twitter account and look what I said about 398, and you'll see why. I'll explain why right now. Really, is just because we got to a point where now we're so extended to the downside, and there's so many people on one side of the trade that the chart needs to. You'll hear me say this term a lot. It needed to reset. It needs to squeeze some shorts out and kind of set up again. And what was the big factor that made me, think that we were ready for a multi-day correction back to the upside through 398? It wasn't necessarily the daily chart so much as the weekly chart, which was we were essentially at a point in the weekly chart where, I mean, I looked back to as long as I could see back from my trading career, and I tried to find one point at which there was 7 weeks of red candles in a row. And guess what? I couldn't find one. I think in 2008 collapse there was close. There was a close to one, two, three, four, five, and then it had a green correction. So like we kind of got to a point on the weekly chart where it seemed impossible that we were going to head lower at levels like this without at least a correction back to retest that weekly chart trend. And you can see that this level right here, 415, is big, which I've mentioned a lot on Twitter as well. So I mean, to me, it's going to be harder to go long in a bear market environment. There's no question about it. I think that when we're in a bull market, I like to look for areas where bears are getting trapped and then look for longs. And in a bear market environment, I still think there are opportunities to go long. Of course there are, and this was one of them through 398. I'm just giving you the example on SPY. I don't necessarily trade SPY every day. I don't trade futures most days, but this is for any stock or asset or any large cap stock that follows SPY. It's all relative, right? So Yeah, I mean, to me, this was a spot where definitely shorts got trapped into too much weakness under 385. The selling started to dry up down there, and we're due for a bigger correction, not necessarily a macro one, but bigger correction back to the upside. So what next? So what's next? Well, I'm looking at this chart, and I can see a couple of different scenarios. I think that are both fairly interesting, and I'm going to give you guys some perspective on what I think could be coming and what you can watch out for. Of course, these are just ideas, and what I do is, I might have an idea, but I'm not trading off that idea till I see what I would consider to be a validated setup with a risk reward scenario intraday, or on a multi-day scale that makes sense. So here's what I see, and here's what I think is why we're actually getting into fairly interesting territory from a macro view again. So we're taking a look at a daily chart on SPY. And actually, as you can see here, guys, as a matter of fact, I haven't actually been very actively, you may have noticed I haven't actively traded large caps over the last week. And the reason why is, aside from this break back up through 398 that kind of warranted the correction to retest this weekly chart trend, aside from that, we've actually just been kind of consolidating. And I like consolidation because usually the more that we consolidate, the more the market is kind of charging up for another move. But it means that we're range bound. And you'll notice that the volume is starting to drop off on the daily chart a little bit, because right now people are positioning themselves for what they think is going to happen next, which I can understand that. I think for most of us, the thing is you want to have an idea for both sides, that a setup that could happen on both sides, and just be prepared to attack it when it happens. I'm not a fan of, like, when a stock is consolidating, picking a side before confirmation, because, for example, if everyone's thinking short already, which I could see why, the weekly chart rejection we just saw, I could definitely see it build a case for the short side. But if everyone's already short, well, what if we end up holding this daily chart trend and then we do one more flag? Well, that's going to push out shorts that are positioned too early, and it could create maybe not that big of a move, but a slightly bigger move to the upside. And then this is what I call a chart reset. Then I would be really, really interested in looking at continuations lower at a level over here. I'm giving you guys this perspective on a daily chart and a weekly chart, but this is exactly the same way I day trade when I'm looking at intraday setups on 5-minute charts, 15-minute charts, and hourly charts. I'm looking at where are people long and short, where are they likely to get stuck on the wrong side of the trade, where are they going to stop out if they are on the wrong side of the trade, and how can I trade against them to get that advantage. And a lot of the time, like, I feel like if we are ultimately going to stay in a bear market and we're ultimately going to go lower, let's say that is possible for sure this year, right? There's two possible trades that I see upcoming that could be very, very interesting. The first one, I mean, if we do this, where we do kind of hold up on this daily chart, and then we kind of force shorts out over 415, creating a short-term effect where shorts kind of need to cover, maybe some new longs come in overhead, I think that could create a really good opportunity for a macro view short like this that really gives the chart a chance to sort of breathe a little bit, because we've been just in a downtrend for so long. This really gives the market a reset, is what I like to call it, where really shorts get pushed out. We kind of get some new blood in overhead on the long side, and then they have to sell in the reversal. Then you just get more valid and just more sell pressure, and it works exactly the same way the other way, guys. If you look at it this way, if we end up getting something more along the lines of shorts get in down here, and then we recover like this, then I would be long bias. I would definitely be looking at long bias trades on these days where the market is starting to curl back up, because now we know that very likely that shorts are involved under 407, and this would be a bad look for shorts if we're getting a gigantic multi-day sort of cup and handle macro view flag. So here's what I'm looking at for the next week. I'll be watching these kinds of setups with the team. Obviously, I'm trading intraday mostly, so not exactly investment advice, just giving you an idea of how I look at things. And to me, even as a day trader, I very, very much so put a lot of focus into what the daily chart is doing, what the weekly chart is doing, what the context is on those bigger time frames, and they help me make better trading decisions on the smaller time frames. For example, if we're holding trend really well on the daily chart on SPY, well, I'm probably not going to be a short in areas like this today because I'd be shorting right into support, right? Pretty elementary stuff there. But what I will be looking for is we are getting close to potential moves like I was kind of just drawing out for you guys. I think that um, at least in the short term, we could end up seeing, if we see like a lower high tomorrow or the next day in the market, if there's a spot, for example, where there might be like a multi-day sort of short setup, 408 to 410 area, that could create enough sell pressure that it runs all the stops that longs are using at 407 right now. Because you can see there's a double bottom at 407, and that's where the daily chart trend is, so it makes sense. If we ended up kind of breaking, end up with a lower high over the next day or two, or maybe even tomorrow, but probably over the next day or two or three or four, however long it takes, this could be an interesting setup to start looking at short again because we've squeezed out shorts, at least the weakest ones we've squeezed out and had people taking profits. Probably got some new overhead longs involved over the last, week or two. And this is an area where I would be ready to start looking at trades. And, some possibilities are if we get a setup that warrants a short in a day or two over here, it could cascade into the daily chart starting to roll over 407. That could be a really big day where there's a lot of downside action and a big candle. We haven't seen really a big day in a while. We've been range bound, so it's starting to get interesting to look for those bigger moves. Also, like I said, a possibility is if that trade happens, this is why we take profits into moves, because I also drew out a scenario for you guys where this happens, in which case I'd be ready to flip, to change my bias, because now I'd be looking at shorts trapped down here and looking at long bias trades. Again, this isn't just exclusive to a daily chart or weekly chart. This is any time frame that you want to look at. So I think that, we're getting into a time right now where there's going to be some opportunity, more than we've seen in the last couple weeks. It could be a setup like this. Potentially, if we end up really holding, I do like this idea, but it would take a lot longer to play out as we get really macro shorts out of the way and then kind of set up a new macro reversal, sort of big bear flag on the daily chart and weekly chart. But one thing I think is really interesting, like I keep mentioning, is that weekly chart, which we've tested now twice and keep rejecting it. So, like I said, guys, I could see a couple scenarios playing out here. I could see this happening, which could be interesting. I could see that happening followed by this, which then means we go from short to long bias, but then that could really help. Sorry to throw a lot at you like this, but I mean, this is trading, right? You have to be able to change your bias depending on what you're seeing from day to day, right? So I mean, that could be another really good scenario. So here's a few ideas for you guys just to keep an eye on over the next couple weeks, maybe a couple months. I am not in a position right now where I'm ready to get bullish overall on the big picture, on the macro view of the market. I think we've been in a downtrend since January. I think that we are I think that the way I always explain it to my guys is don't try to swim against the current. If we're in a bull market environment, the best times to look to go long is look for those short traps where bears are getting trapped, and then look for those setups that come afterwards. It's always easier to trade with the trend. I do a lot of shorting, counter trend shorting, but it's always when we're so far extended above the trend that the odds are so highly in my favor to get a pullback, and the proper intraday setup, a high win rate in a low risk trade, it's always worth it. But from this view here, all through, where a lot of people started trading in 2020 to 2021, all bullish. You're looking for areas where shorts are trapped to kind of get long and continue, but now it's complete opposite. And I'm looking for areas where bulls are getting trapped, buying breakouts, and then looking to get short after those breakouts fail, like they should, until we see proof, really solid proof of concept within the charts that's showing us that we're back into a bull market territory. I think that's all I got for you guys for today. I was just gonna mention really quickly a few. So it's harder to find daily chart setups for long side trades as of recent, but I still do find a few here and there. Last week was VERU, nice little short trap, sort of basically a daily chart reset where longs had to sell, or at least they should, take some profits, sell or stop out, which kind of happened under 1185. And a really interesting thing to me was on this one was when it broke down there and then reclaimed the following day. That actually was one of the few sort of long swing longs I've had in the small cap space in a while. But granted, in this market, it doesn't last that long. Had a sell signal this morning, but still have, still in an uptrend on the daily chart. So still daily chart players are in it, but not getting a lot of follow through in those. And it's going to be very difficult to find these scenarios right now. And when we get back into a bull market, you're going to see them all over the place. But until then, you're more maybe want to get more interested in looking at how to play short side trades where the momentum is more in your favor, like that. Today I had there was two setups I really liked. GOVX I think had this really nice consolidation on the daily chart, but what kind of market environment we're in right now? We're in a bear market and we're not getting a lot of follow through. So yeah, a really good setup like this where you have a really good multi-day setup with a really clear tight risk level, in this case 189 with a breakout level at like 199 where you're only risking 10 cents. Of course it's worth it to take that trade, but I don't expect these to hold for multiple days. This one actually closed lower than it opened today. It broke out and it did what I expected it to do. But in this market, what I don't expect is I don't expect it to run for 2 or 3 days. I don't expect to get much more out of it than simply what it is, probably a long scalp because we're in a bear market environment. So, I take what I can get on these ones. I still trade long in this market, but you can see I'm not sticking around very long. First sign of a reversal, I'm kind of out of it, and I'm not sticking around very long. I also played long on GOVX today. This one, or excuse me, RDBX, which this was more of a daily chart setup again, and like I was looking at this as a daily. This was going to likely break out on the daily chart through 707, but here's the big thing I'm going to leave you with. All right, is in a bear market environment, you don't want to be necessarily buying breakouts. You want to be selling into breakouts. So technically today, the daily chart breakout level was 707, but I wasn't buying up at 707 really. I took some scalps up there. I'm selling into that breakout. Okay. So, I'm not buying there and expecting this to run for multiple days. I actually started long on this one quite a bit earlier than that. And this one ended up being not my favorite kind of setup intraday, but I was just kind of playing for the break of the daily chart over 707. And if it gets over 707, I'm not going to be buying over 707. I bought some because it was going to break out there, but I noticed I sold right into them, selling into the breakouts. So as people are chasing this up into highs, you're selling into it. And, with a proper trail, you're probably going to find yourself selling anyways right in here. Reversal through like 706 on that one. And then there's other ones where, they don't really do much of anything. I was looking at IMMX today. And I think this daily chart's also pretty interesting, but we're just not in a market where we're getting a lot of follow through, and I ended up with like a 48 average on this one today. And the best sell I got on it was 54. Didn't really go anywhere, though it's still technically in play in the daily chart. The volume just wasn't there, right? So we're just not getting as much follow through on the long side. So it's gonna be a little more interesting, I think, over the next week or two to focus a lot on potentially some macro reversals that could happen in the market and whatever large caps that you like to trade. I know a lot of people like to trade, Tesla. I like Intel is a good one. I actually like to follow Intel quite a bit. I think it just trades well. I'm just dialed in with how this one moves, and I watch it on a daily basis. Same with BAC, Bank of America, and I think that these are also starting to look interesting. Kind of a failed flag on BAC, starting to kind of set up to maybe move lower if the market wants to set up that way too. So lots of ideas there for you guys to kind of ponder over. And yeah, like I said, if you found this video helpful, if you liked it, please give me a thumbs up, give us a subscribe. If there's some good, positive momentum, I'll try to keep up with posting on the channel a little bit more often, guys, because I kind of completely abandoned it. And if you're wondering why I did, really the biggest reason is because I do so much work with the group so at the end of each day I do an hour-long video. This is only a 30-minute video. I typically do 45 minutes to an hour with the group and record those sessions. And I just, quite frankly, a lot of the time I just don't have the energy to go back and then redo content for YouTube. And the content that I do create for the group is very strategy specific, and it'd just be too much to share, be oversharing in terms of strategy. And I think it's important to kind of keep your strategy, close to your heart, because eventually when enough people are trying to do the same thing, it becomes more difficult. And like as many of you guys have known, I have made some adjustments for sure over the last year, positive adjustments since the big COVID boom. And if you're interested in learning more about those adjustments, or you just want to, get commentary like this every day, learn how to trade, hang out with us and chat, you know where to find me, livestreamtrading.com. Do offer a 7-day free trial now, so feel free to come check it out for free. And if you like what you see, we'd love to have you on the team. All right, guys, good luck trading this week. Remember what we talked about? Trade safe, always have a plan, always trade your own plan. Those are some ideas to look at. But I gave you guys scenarios where things could happen both ways, so it's all about waiting for one of those scenarios to confirm within the chart, trading it intraday, and having the right risk reward setup, and trade well, guys. All right, have a great week, everyone. Cheers.